want to say good afternoon and welcome to the Practice Advisors 360 webinar. I really appreciate your taking the time today to join us. We're excited to be able to block out some time to share with you, what we think is important information for you as you are thinking about either starting or maybe you're well into the journey of opening a new practice in our current environment. Before we get started, of course, we do wish that each of you and your families are currently safe and healthy, and obviously continue to be that in the future. Before we get into the meat of it, some logistical items. For this presentation, you're going to be on mute, but you will be able to type in questions. I do expect this meeting to run about 30 minutes, okay? Maybe about 25 minutes of me speaking within the presentation, about 10 minutes or so, or 5, depending on how much time we have of questions. We try to leave as much time as we can at the end, just so we can answer as many questions as we can. Now, we do hope to get to most of them, but if we cannot, what we're going to do is we're going to capture anything we haven't gotten to, and we're going to provide those. So we're going to come up with the answers, we'll provide them, and we're going to communicate to the group. So at the end of the presentation, we're also going to have our contact information as well, and we are always available to speak with you one-on-one. Okay. Maybe a little bit about Practice 360. First, if you aren't familiar with us, our founder, Brian Cho, has more than 20 years of extensive experience. He's in representing healthcare professionals. He's been providing solutions from market analysis to healthcare lending. Brian himself has delivered over $500 million in practice loans during that period of time. And I'm your presenter. I'm Chris Maiorana. I'm a partner with Practice Advisors 360. I'm also a licensed real estate salesperson. I work with our real estate arm as well, which is called Practice Real Estate Group. We operate nationally. We specialize by only working with medical practitioners. Brian and I have been working together for about 6 years, and we help our clients. We navigate the finance and real estate complexities. Before we again dive in, something our lawyers have advised us to include, just a few disclaimers. I think that we all realize that we're in an unprecedented time, and the information available to us is changing rapidly and can become outdated fast. And also, Practice Advisors 360 does not accept any liability as it relates to the timeliness or content of the information we're sharing today, or that we share in the future. And we're under no legal duty to update any such information or recommendations, but as I said before, we plan on doing that. But we also do encourage you to speak with your attorneys, your CPAs, and financial advisors for any additional insight. But nevertheless, we are staying very close to the situation in the market, and as it evolves, we will share with you as soon as possible information that does come out, any type of guidance. So, why don't we start to get into the meat of the presentation itself? As we know, things are still very fluid, okay? There continues to be uncertainty, and we do not have all the answers. COVID-19 has had a shock factor on the economy, and even though self-quarantine has felt like ages, really only been about 2 or 3 weeks. Now, we did hear this week that the federal government would like to get the economy up and running again in the next 4 to 8 weeks, which would be a great thing for all of us. And we're cautiously optimistic that that's going to happen. And, that we'll start to see more guidance for our small businesses such as ours. And I also think that we'll start to see improving conditions in regards to the health of our fellow citizens. But we're here today to talk about the impact of this environment on your desire and your dream of starting a new business or another business. And what we're going to look at is what needs to be done. And we understand that each individual, it very well vary depending on where you are exactly in your journey. And we're going to do our best to address as many scenarios as possible. But if you are left with more questions, rest assured, we're here. We're available for calls, as I said, and we're going to do best to answer your questions after this call. So why don't we take a quick moment, right? Well, let's review the commercial real estate market. And I wanted to make some comments in regards to what I'm seeing. We've seen the stock market come down off its previous highs, but at the end of the day, the real estate and stocks, they're very different assets, and traditionally, they're really not closely correlated. Now, although people assume a direct relationship exists, statistics indicate little direct or casual relationship instead. And we have to understand that the real estate market is illiquid. Historically, it does take some time to see a correction, all right? One of the things I'm sure we're all concerned with is the pricing, all right? And real estate pricing is based upon supply and demand. And at the moment, today, supply of real estate hasn't really changed, right? I mean, there hasn't been a tsunami or a hurricane that's wiped things out, or another national disaster that's really affected the number of properties that are out there. So at the moment, I'm seeing that the supply will roughly stay the same, okay? But I think it's going to really be the demand that we're going to have to keep a close eye on. Okay, there's a significant uncertainty in the current market as it remains really too early to confidently predict, but how that economy, I guess, will respond to this systemic shock. But what it means for us is that we have decided on a location, right, in the near future. We like the spaces that we've chosen, so we do have to consider some real important factors. And one of those is going to be timing, okay? The negotiations around timing are always important. How much time do we need for this diligence? How much time do we need for permitting, architectural design, actual construction? How much time do we need to put financing in place? So all of these factors are going to be critically important and will always be a primary focus around any project for consideration. And right now, we're in no rush to engage on long-term commitments, until we understand and we can project a more stable pattern of consumer confidence in economic interaction between consumers and patients and service providers. And to this degree, interest levels may remain and negotiations may continue, but timing to convert those negotiations to contract really may include a longer agreed upon due diligence period of time, and that's why economic conditions are situated. Certainly, there is increased risk in engaging on long-time decisions when businesses have such adverse impact, right? And especially that so if you don't have control over that. Let's talk a little bit liquidity out there, right? We said real estate is illiquid, but liquidity for now, the pandemic is resulting in quite a shock, right? This is something that we really never have seen historically, at least as far as I can remember. Seeing the movement of cash stopping as abruptly and as uniformly as we're witnessing today, in a period of shock like this, it causes economic uncertainty and people to hoard the cash. So to that degree, we're leery to enter into a long-term decision that makes or requires, let's say, cash injections, shifting all of cash into the asset management. And there are a lot of decisions that need to be made. But again, we're constantly gauging that economic stability before we start trading those cash for assets, especially in a market scenario like we're in. We're also a big indicator out there now that is something that we do need as business owners that provide service. It's unemployment. Unemployment obviously impacts consumer confidence. The consumer's ability to convert rising confidence to economic activity. We need to understand short-term unemployment spike will filter through this before we really understand how it's going to impact new and existing business. Is this income there for discretionary expenditures? Does the community under analysis value the healthcare expenditures over discretionary options? Unemployment in the immediate and the predictive medium range is going to be a key indicator of a return to economic stability. So these factors that we think will directly impact your demand. And this is going to be information that we can provide you, the Practice Advisors 360 can provide you. And that's really the baseline. That's what we try to bring to the market for you, is this guidance to help you to stay ahead of the curve. We want to do it in a controlled and informed way. We have the relevant experience, we over the life cycle of the project, and we obviously do want you to be successful. So with that being said, let me start by sharing some high-level insights, from the industry that I've gained just from my conversations and what I'm seeing in the market. And what I'm going to do as we move ahead in the presentation is going to drill down a little bit further into specific scenarios that I hope that you can identify more with exactly where you are today. But from a tenant buyer or tenant representation or buyer perspective, we have many clients that continue to actively look for their locations and properties that continue to come to the market, right? And all of these properties can still be shown, they can be visited. We even have some listing brokers out there that are creating videos to make it easier for you and your experience to see the space. That's where we're not violating any social distance requirements or anything that might be out there at the time. Letter of intents. Properties that we like, they're still being accepted by the landlords. And we are noticing clients that are already in this process of signing a lease or finalizing on a property, not canceling their projects altogether. They're pausing, right? So they're putting it on hold. They're getting to a certain point, putting it on hold at an appropriate time in their journey, right? They want to take a temperature check and they want to make sure that they're comfortable with the current conditions. Our point of view at this time is that you do not want to stop your search right now. You should continue with the space you originally understood to be a great location. You can still visit the properties, as I said, or virtually tour them. You can use this time wisely to really understand the situation dynamics, right? Timing, demographics, competition. But I think what we're finding is we're going to have to start, or we're likely going to have to start to collect more data points that we have not typically done in the past. And we're going to have to increase, we want to do this to increase the context of your decision. So you're making data-driven decisions. And we're doing this since, things are rapidly changing. And I'll give you an example. So we got to look at potential unemployment metrics for the communities you want to serve. We may now need to start to drive the community to look and see what shops have closed up. Are there larger businesses that have shut? We'll want to also know, we're going to have to really do our due diligence when talking with a landlord. We're going to need to know how well capital backed they are. That's going to be real important. And what are they going to be able to help us in this process as well? And then, of course, we expect there to be different types of legislation that's going to be out there that's going to impact your businesses. And shoot, what's the cost of compliance of doing that? Okay. Why don't we move on to the landlords and just see what their point of view is? Their short-term plans are intact as they really are trying to stay the course. Okay, they want to meet their long-term goals, but it's fluid today, right? They could very well be getting squeezed by their creditors and the tenants that are unable to pay. So we need to keep an eye out on the possibility of a lot of distressed assets going out to the market soon. It may just not be possible, the lack of income or interest in the long-term decision making, and they just haven't changed that long-term goal yet. But by continuing to move ahead with their original plans at the moment, we also need to keep in mind that each landlord situation will be different, and we're going to have to deal with each landlord differently as they're going to have different needs and goals themselves. So they will be keeping an eye out on key economic indicators as well, and will want to stay as close to a plan as possible. The last thing I did want to get into, and this is a very important piece of the project, of course, it's the lenders. What we're seeing, today is that yes, they are still willing to finance your deals. Now, provided your business is able to considered functioning, but they are, you know, they are still going to put their credit policies in place. They're going to continue to review the projects. Funding could be delayed. We want to take that into account, and it may be contingent upon that business functionality, right? Again, your business being allowed to function. But the lenders, the banks, they do understand the value you're bringing and the need in the marketplace. All right. But at the end of the day, we need to note, we really need to make sure that we're reviewing their policies, you know, where they may find risks themselves, and really consider the importance of lending, how fluid this is. We're going to be staying very close to the space as guidance becomes clearer, but we also recommend that you stay very close as well to your lender and provider. Okay, so let's drill down a little further into the project and some scenarios that you may currently be in. I've broken down the entire project into 3 phases: the business planning, the initiation, and the project execution. I was going to start with business planning. This is phase 1 of your 6 to 9 month journey to open your practice. Okay, and let's look at this first scenario where you are currently exploring the geography and the sites. Okay, that you're at the beginning stages, and what I say here is keep looking. You know, there are still great sites available now. And as I mentioned, there are more that continue to come to the market. So you don't need to stop now. This is where you can find good locations. Of course, risk in the current market, but it's worthwhile to continue the hunt because it generally takes 1 to 3 months on average to identify the right site and then actually begin the negotiation for that letter of intent. So, reiterate, use the time to research as well. Get a better understanding of the demographics, competition data, with time to visit the properties or drive the sites in the communities. Get that time to secure your financing. And keep in mind, competition is still active out there. Okay, business owners, current medical practitioners understand and are confident with their proven model, and they're looking for additional spaces and be ready to go when we come out of this. Okay, but it is out there. They could move in on your desired community, so keep that in mind. Plus, delays now, you delay it now, it'll ultimately result in delay of opening your practice and that opportunity to realize your own revenue. Okay, so in summary, in this scenario, if you're at the beginning, keep looking, understand the demographics, negotiate your LOI, and make sure you kick off that financing. Another scenario, now you may have found the right property, for you and for your location, and we are negotiating your letter of intent. Continue with it at the normal pace, the back and forth. A negotiation LOI could take anywhere from 1, 2 to 3 weeks or so. Do this, especially if you intend to open your own practice once business does open back up and our economy begins to normalize. And also note this, the letter of intent, by the way, is a non-binding document. It's really a negotiation tool. You're not going to be held liable to it. And what it does for you is it can solidify your place in line if there's multiple tenants looking for that location. But also note that it does cut both ways, as a landlord could move to lease with another tenant before you make that decision to move forward. So just be aware of that. As I mentioned, each landlord is different, but I do think that we may be maybe able to be a little bit more aggressive out there right now. Because in my experience, landlords are motivated by occupancy, right? Not vacancy. And that landlords may be motivated to do a deal with more favorable terms for you, especially with a medical professional looking for a long-term commitment. If they aren't willing to move, then we need to sit down and review the terms, decide what we feel is the best value for the space. And at that point, we decide whether or not it's a good time or a good situation to move ahead upon. So in summary, on this situation, continue to negotiate. Don't put that on hold. It's your property. Let's see if we can come up with a good deal. Again, you're a medical professional. You're considered a very stable tenant. to the landlords. You may have strong leverage versus others in the marketplace. Keep in mind that the property owner liquidity, though, is also being guarded this time. You might swing your mindset to extended periods of free rent at the beginning of the term. Maybe we do that instead of tenant allowance. Cash is tight. But this is a balance property owners may be willing to deal with that squeeze of reduced rental income and against very inflexible leverage terms from their lenders. Okay, so let's be open to consideration of the full range of options that may be present in uncertain, these uncertain economic times. Now, let's say in this scenario, and this is here where now you really are in lease. Okay, so you've signed the LOI, you're in lease, and it's or purchase and sale. Our position in this is we don't disagree in the least bit about your hesitation to sign, and we don't recommend signing a long-term commitment at this moment if you still feel that there are too many unknowns. Okay, of course there may be special circumstances out there, and although we don't know the future, maybe we've identified the perfect property, right? Outpositions your competition. It's the ideal location, the size and layout, a great favorable terms, the visibility is perfect, great condition. Yeah, that's something that we really may want to take into consideration if we think putting that on hold and not losing that in the future, maybe it is something to move ahead with. But remember, you're not going to have rights to that location unless we do sign a lease or that sale contract is closed before you have any control over it. But for more general circumstances, and I'll use the draft lease as an example, the first, if you're there, the first step is to be in communication with the landlord. Okay, we want to make sure that they understand that yes, you are committed to that location and you do want to sign the lease. But that's really once the world reopens, right? And it appears that COVID-19 is more under control. So we want to make sure we're communicating that. So it doesn't look like that we're just gone away and we're running away from the deal. So there's that communication. And given the current circumstances, we really do expect that most landlords will understand. And most likely, they'll come to us first if another tenant were to pursue that space while we're on our hold time, while we're waiting. Although I don't really foresee many other parties really doing this, but I do think that keeping that relationship there is important, especially if we want to move ahead. And another option to consider, we have had some success and we've had less success, but it's adding a contingency period, pre-lease, where you construction an agreement based on economic terms, providing you the necessary timing that you need before you take that long-term commitment. When I we don't want to really just have to walk away from any of these types of things. We don't want to. We want to make sure that we're communicating with them, because if financing does dry up for us, we want to be able to have an out because of the environment that we're in. All right. When we talk about walking away, maybe there's a certain time in the future that if we can't get that financing, if we just can't get the permitting, then there is an opportunity for us to walk away and break that lease or potential lease. Landlords overall are going to want to try to get a deal done as well. All right. They are in a tricky situation. They buildings with occupants make money. They may have a lender that they can't pay if their tenants can't pay rent, but they still want to work with you. So just a summary of this phase. Again, we should continue to negotiate a lease like we would under normal circumstances to the point where you are ready to sign it. All right, let's get it to the final version where you're comfortable. All right, and then we can have those conversations on when we plan to execute that, when we plan to get onto the platform, So when things do come back, we're prepared to quickly move ahead as long as you're comfortable doing so. Why don't we take a look at a couple of the other phases here, the initiation and the project execution phase. This is phase 2 and 3, as I call it, of your 6 to 9 month journey. Now in these phases, you're mobilizing your resources, right, for fit out, or maybe you're already in the middle of the refurb and you're approaching launch. And in this scenario, you have executed the lease, and you have to begin mobilizing because you're against a clock, right? You only have a certain period of time. So either you or your project manager is going to be engaging all the appropriate stakeholders, making sure that they're available to move ahead on your project in that allotted time frame. We generally only have so much construction time that we've negotiated. And this could be, these stakeholders could be your architect, your equipment vendors, your lender, of course, a marketing team, web designer, staffing if you need that. And in this environment, more than ever, you're going to need to be in touch with your landlord and freely communicate with them. We talked about it before, but even more important now that you have you're under agreement, you have a contract signed. You're going to want to let them know your progress, and that's whether you started the fit out or not. And you're going to want to do this in case a delay happens, especially one that's out of your control. You know, again, perhaps permits aren't being issued by the city or town you're in, or there's a standing order that the construction must be halted. We have seen that. What happens if the equipment vendor or the manufacturer can't deliver within normal time frames? So these things could happen and could arise. So you're going to want to continue with that good relationship with the landlord. In the instance, you do have to ask for modifications to the original terms of the lease. And those discussion options would mean what? Moving the end date of your construction period back, or maybe it's delaying the start of rental payments. I always say you're not a t-shirt shop, you're medical professionals. You really need to be open so you can start making revenue before rent starts. Okay, so those are the things we definitely would want to talk about. Now, in the past, even outside of the environment that we're in, we found that landlords are typically amenable to this. Okay, of course, each one is different. But we have been able to ask and receive either rent abatement or rent deferral if we do run into some of these project problems. And I'll give you an example. Let's just say that we want to push back a few months of rent, right? Well, there might be some options there that we could do. We could go back to them with and say, listen, these 2 months, these 3 months of rent that we want to push back on, maybe we put them to the end of the term. Maybe it's after year 5, year 7, year 10, and pay for them then. Or possibly say, listen, I need to push back 2 or 3 of these months. And what we'll do is take the average cost of those, and we're gonna average it out over year 2, and we'll pay it back that way. The point here is that the owner is likely just as invested in you and your business at this point, and wants you to be successful as well. You're going to be a very, very important part of income going into his building. So again, continuing those good communications with your landlord is going to be important, so that they can plan in advance for any possible modifications as well. All right. So I think before we move to the end, and I was just looking at the group on the the attendees here, looks like we have a decent amount that currently are business owners, and I do want to address one more situation. So bear with me here. Your current business owners. Okay, so if you're a current business owner today, you might be looking for additional space, whether it's to grow into or just another location, or just you're relocating your business at the point. It's important for you to continue your strategic growth as well. All right. So again, don't stop. Continue doing that. And here's some things you want to keep an eye on the market. Okay, keep an eye on practices that are for sale or coming to the market for sale, right? What are we seeing out there on impacts to valuations? What's the level of anxiety like out there with folks that are trying to sell their practices? Are we finding a trend, right? Keep your eye on your societies and your associations. For example, what's the Massachusetts Dental Society saying right now, right? And when we do open back up, this is important. Keep an eye out, you know, on your scheduling ratios. What do your conversion ratios look like in the new, you know, in the new world? Your treatment acceptances. What does that look like? What are the number of patients that are returning? You know, and the patients that are they taking on finance? You know, with higher rates or lower rates than before? Are your patient numbers reducing? You know why? Is it because of unemployment? Can you, as a practice owner, can you create a solution for them to still get the treatments that they need? Can you be that solution provider so they'll come to you for that? And of course, as I said it before, we also want to make sure we stay close to any legislation requirements. I think we probably agree, again, we'll see some coming out of that. And an example that I think we'll see is changes in regards to PPE, right? Some of the requirements there. What's that going to mean for you? So you need to be on top of that. But what's that going to also mean or impact your overall supply costs? Okay. At the end of the day, we all want to make sure that when you open your practice, you're in a position to succeed. All right. So I'm gonna take some time. I'm gonna stop there with the presentation part. We'll conclude that. And again, I think we all agree it's an uncertain time now. All right. But I really do believe that you have the opportunity to continue to move ahead, you know, your dream of opening or growing your practice, wherever you're situated at this point, and even this year. Okay. Now, just please know that Practice Advisors 360, you know, we're well positioned to provide you the direction and the resources you need so you can continue along that journey. Okay. And the last point I do want to make, I know we're going to be doing this because the feedback that I got, even going through some of the detail that I wanted to just talk about today, we're going to be putting together additional webinars. And we're going to get it out to the group to let you know specifically what they're going to look like. Some might be different, some might be more of a presentation like this, some might be more of a round table. We're working through that, but at the end of the day, we want to better address all the questions that you have and the key topics that are out there. And we're doing that because it is uncertain. As we get the guidance, we just want to make sure we can all feel very comfortable moving forward in this environment. Okay, so before we open it up to questions and answers, I suppose I just wanted to make sure that on this slide, I think we're all looking at, that's our information, that's our contact information. It's just, you know, if you take a moment, feel free to take a picture or a screenshot if you don't have it already. And at this point, maybe you take a moment to type in any questions that you might have. Again, I'm hoping that we can get to all of them. We're gonna have to do a time check, but at the end of the day, we're hoping to get to all of them. But of course, if we can't, I mentioned before, we're gonna capture them, we'll answer them, we'll compile, and then we're gonna send an email out to the group, all right? And of course, Brian or I will be available at your convenience for, you know, a one-on-one conversation or a call so that we can also dive deeper into your exact situation. So quick time check here.
So I think we have about 5 minutes.
Okay, so we have about 5 minutes. So why don't we start going through? Elizabeth, if you would take a moment to just begin maybe compiling them, and let's see if we can propose a couple I can answer.
So let's start with the first question that we received. The question is, what happens if the economy remains constrained or even goes into a recession and I've already opened my practice?
This is obviously a possibility. And as I said at the start, there's too much uncertainty to know what is going to exactly happen. Nobody has that lens just yet. But let's talk about areas like New England and why we think this is still a favorable region to open up your practice. Let's look at some metrics that we know very well in New England. Average level of education is higher. All right, your median incomes are higher, which means that you have higher disposable incomes. Okay, that education with the higher disposable incomes in New England, what it does is people tend to spend more on their health and on their health care, right? And we have data to back that up. We have medical consumption rates. We have rates that show that we're typically higher than the national average when it comes to that medical consumption. In some communities, it's 2 and 3 times as much. So it does lead us to assume that medical practices are still a solid, sound investment. I guess just to kind of wrap it up, it's just we feel, we just feel that you still can get the patients in your practice, and even within a downturn in the market, and still be successful.
Great, thank you, Chris. The next question: how does this pandemic and its impact on the economy compare to other events in recent history?
Well, this is this pandemic. I'm not sure how it compares. I don't know if there's really anything in recent history that this compares to. When you looked at SARS and MERS some time ago, the numbers are the same, but it's a bit unprecedented that they really shut down the economy. I can liken it to maybe the Great Recession of 2007 and 2009. That's where most of our markets saw rents decrease around 15%, and that was after many months, if not years, after that recession. And just as a reminder, what caused that was a credit crisis, and it was declining values. In the real estate market. We had record high foreclosure rates and default rates on loans, so that was really what was responsible at that time then.
Thank you, Chris. The next question: what if I am negotiating an LOI on a great property, but the landlord is not willing to negotiate on rent, even though I am a medical professional asking for a long-term lease, like you went over earlier?
Yeah, this could happen. Very well might. We might run into a landlord that is no more motivated by occupancy than vacancy, right? They may have longer term commitments that they may have to keep instead of them lowering their rate down. They might be looking for some additional credit, or their long-term plan was having them re-up with their bank in a few years. So I think we might just need to consider to take a closer look at that property, right? Number one, see if it remains favorable. If it does, there might be other levers that we can pull that just may not have to do with price. And we talked a little bit about it. Maybe it's something along the lines of just more time, more free, maybe we'll call it rent abatement. Maybe it's rent abatement over the course of numbers of years. That way the cash flow is still there, but it helps your margins as you get started. So, we want to look at it in the light of what works best for you. And like anything, anytime we consider these types of terms, we just want to make sure that we're in line with what the market currently is or are currently showing.
Right, thanks, Chris. The next question is: I'm overwhelmed with my upcoming project and do not have a project manager lined up. Do you think having a project manager is an important component?
Thanks, Elizabeth. Yes, absolutely. I do think it's a very, very important component. Here's the thing, and it might really not be obvious to everyone. There's is really great complexity. And if you've done it before, you understand it. If you haven't done it, you'll know. But there's so many moving parts, and there's so many touch points in that, with every stakeholder or vendor that you have to approve to, just decisions from colors to tile. What you're also trying to get access to money. You're trying to coordinate all of your vendors. I mean, you're working with your architect, your accountant, your equipment vendor. You're trying to coordinate conversations with all of these folks, and you're doing this, and it's complicated in a certain market. Now you're in an uncertain market. So, yeah, I mean, at the end of the day, I think it's something that you should highly consider. It will place you firmly on the path to opening your practice on time and within budget. Okay. All right. So why don't we end here, unless we had any others that come up? No. All right. Well, as I said, if you do have any other question, feel free to type it in now or shoot an email to us. As I said, we're gonna capture and define. We're gonna put the answers together. We're gonna send it out via email, and we're gonna try to get it up on our website as well. So I hope today was useful for you. I hope we did answer some questions. If there are other topics that are important to you and your business that we did not drill down on today, we wanted today to at least get out as much information as possible. Please come back and let me know specifically. We'll either answer it for the group, or we can talk to you one-on-one from that end. So I'm gonna close up. I guess last thing, I guess there's gonna be a quick question as you log out. If you don't mind just taking a quick 30 seconds or so to answer it. I think it's a poll. And again, I really appreciate you taking the time today. And I hope you continue to be safe and healthy. So thank you. Thank you for taking the time.